Right now, while you're listening to this, $47 million just moved in a circle. OpenAI to Oracle, Oracle to Nvidia, Nvidia back to OpenAI. No product was made, no value was created, just money spinning. And Wall Street is calling this innovation. I'm calling it what it actually is. Let me tell you a story that sounds absolutely insane, but it's 100% real. In September, OpenAI signed a $300 billion deal with Oracle. That's not a typo, $300 billion. Oracle's stock immediately shot up 50%. With that new valuation bump, Oracle turned around and bought a massive amount of hardware from Nvidia. Nvidia's stock exploded to all-time highs. Then Nvidia took that money and committed $100 billion back into its partnership with OpenAI. Do you see what just happened? Money went in a circle. OpenAI to Oracle, Oracle to Nvidia, Nvidia back to OpenAI. It's like a financial merry-go-round, except instead of kids and horses, it's billion-dollar corporations and AI hype. Some people are calling this a Ponzi scheme. Now, technically, it's only a Ponzi scheme if there's no real value underneath all the money flying around. So let's check. Is there real value? Well, according to a recent MIT study, 95% of corporate investments in generative AI have produced zero return on investment. Zero. Zilch. Nada. Companies are pouring billions into AI, and 95% of them are getting nothing back. That's like buying a $10,000 treadmill, using it once, and then turning it into a very expensive clothes hanger. And it gets better. OpenAI, the company that kicked off this entire AI frenzy with ChatGPT, has recently pivoted to animated video generation and sexual content. Yeah. The company that was supposed to revolutionize humanity is now making AI girlfriends and cartoon videos. Not exactly the technological disruption we were promised, right? But here's where it gets dangerous. Since ChatGPT launched, the NASDAQ 100 has more than doubled.
It's gone parabolic. AI stocks like Nvidia have been the rocket fuel driving this rally. Trillions of dollars have flooded into the market based on the promise that AI will change everything. But if 95% of AI investments are producing zero returns, we have a massive problem. This is a house of cards built on hype, hope, and a whole lot of debt. Let's talk about that debt, because this is where things get scary. Google has racked up $10 billion in debt this year alone. Meta, $28 billion since 2022. Microsoft's debt has jumped from $27 billion to $46 billion in just 1 year. Oracle is sitting on nearly $90 billion in debt and adding more every quarter. This year alone, U.S. tech firms issued $157 billion in bonds, a 70% increase from the year before. According to JP Morgan, AI-related debt now makes up 14% of the entire corporate debt market. That's insane. Here's the thing about debt. It has to be paid back, with interest. These companies are borrowing billions, betting that AI will generate enough profit to cover the loans. But right now, the return on investment is basically non-existent. So what happens when the debt comes due and there's no money to pay it back? Defaults, bankruptcies, a financial meltdown. But here's what makes this bubble even more dangerous than the dot-com crash. Back then, it was mostly retail investors and venture capitalists losing money. Today, it's everyone. Your pension fund is invested in these AI stocks. Your 401k is loaded with Nvidia and Microsoft. The index funds that financial advisors tell you are safe have massive exposure to these 7 or 8 mega-cap tech companies that now make up over 30% of the entire S&P 500. This means that when, not if, this bubble pops, it won't just be day traders and hedge funds that get wiped out. It'll be teachers, nurses, retirees, and regular people who thought they were investing responsibly. And here's the really scary part. Because these companies are too big to fail, there's a real chance governments will step in with bailouts, which means taxpayers, you and me, will end up footing the bill for this AI casino. So this isn't just a stock market problem. This is a systemic risk that could reshape the entire economy. The 2008 financial crisis was triggered by bad mortgages. The next one, it might be triggered by bad algorithms.
Now, if this sounds familiar, it's because we've all seen this movie before. Let me take you back to the late 1990s, the internet bubble. Everyone was convinced the internet would change the world, and they weren't wrong. But that conviction didn't stop the market from going completely insane. Giants like IBM, Cisco, and Microsoft were pouring billions into internet infrastructure. Investors were blindly throwing money at anything with a .com in its name. Stocks weren't just rising, they were melting up. But the smart money saw the warning signs. You could find articles from 96 and 97 screaming that stock valuations were totally disconnected from reality. Stanford published a report saying the tech sector had gotten so bloated it was creating dangerous imbalances in the economy. A Nobel Prize-winning economist was on the record warning about the speculative mania. And guess what? They were all right. The Nasdaq 100 eventually lost 80% of its value from its peak. Smaller tech firms just vanished, buried under a mountain of debt. But here's the kicker. Those warnings, they came out in 1996 and 1997. The market didn't actually peak until March of 2000. That's 3 full years later. People who ignored the warnings, who kept riding that massive wave, made fortunes for years. Of course, most of them gave it all back, and then some when the bubble finally popped. So that brings us to the big question. Where are we right now? Is this 1996 with years of runway still ahead? Or is it 1999 with the cliff's edge just around the corner? Here's what we know. In the late 90s, the Federal Reserve was lowering interest rates, dumping fuel on the fire. In 1999, they started hiking rates to cool things down, and that's the exact moment the bubble popped. Today, the Fed has been lowering rates, which is what's fueling all the speculation in AI stocks. As long as that cheap money keeps flowing, the party will probably continue. But the second the Fed starts raising rates again, that's your signal. That's when you know the peak is near. Right now, semiconductor stocks, the heart of the AI revolution, are going parabolic. The line on the chart isn't just going up, the rate of ascent is accelerating. This is classic, textbook bubble behavior. So, what do? Do you stay at the casino table and let it ride? Or do you cash out your chips while you're ahead? And here's something that should absolutely blow your mind. The people running these AI companies, they know this is unsustainable. How do I know?
Because they are selling. In 2024 and 2025, tech CEOs and insiders have sold over $50 billion worth of their own company stock. That is the highest level of insider selling in recorded history. Jeff Bezos sold $13 billion of Amazon. Mark Zuckerberg has been dumping Meta shares every single month. Nvidia's own CEO sold hundreds of millions in stock right before announcing record growth. These are the same people telling you on TV that AI is the future and you have to stay invested. But behind the scenes, they are quietly, methodically heading for the exits. It's like the captain of the Titanic selling his lifeboat ticket to a passenger while saying, "Don't worry, this ship is unsinkable." When the people with the most information are running for the door, you have to ask yourself, why am I still here? Here's the truth. Timing the market is a fool's game. The market can stay irrational a lot longer than you can stay solvent, but understanding the risk is everything. This AI bubble is built on 3 things: hype, debt, and the blind hope that someday, somehow, AI will justify the trillions being poured into it. And maybe it will. Maybe AI truly revolutionizes the world and makes all of this worthwhile. But right now, today, the fundamentals do not support the valuations. And when reality finally catches up to the hype, it is going to be painful. So yes, this is much more dangerous than you think. The champagne is still flowing, the roulette wheel is still spinning, but the house always wins. And when the music stops, a lot of people are going to be left holding the bag. The only question left is, will you be one of them?